My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll do it, make friends. I'm trying to make you a little money. My job is not just to entertain, but to educate, put days like today in perspective. Call me, 1-800-743-CBC, or tweet me, and you should go because it is Halloween, at Jim Cramer. All right, what do you think? Lousy earnings, miserable market. That's my forward summary of what's occurring or what befell us. Even as the averages did just fine today, Dow ultimately advancing 124 points, S&P gained 0.65%, NASDAQ climbed 0.48%. Notice, but a little bit less than NASDAQ versus the others. Now, it's not like the year's been bad. I mean, this is our second positive day. We shrugged off a wayward opening. We know that the S&P 500 is up 9% year to date. Dow's flat. Most important, the NASDAQ's still up a huge, nearly 23%. But I'm calling that number out. I'm saying that number is an imposter. It's, you know what it is? It's a costume. It's a Halloween joke. It's a trick. You see, because the average's strength comes almost entirely from a handful of stocks we call the Magnificent Seven. That's Alphabet, and it's Amazon, Apple, Meta Platforms, Microsoft, NVIDIA, and Tesla. If you weren't in those during the run-up, and that now seems like ages ago, doesn't it? You think that 2023 is one busted year with a blessed couple of months to go. Sell. It feels lousy and miserable because as we whip into the final 2 months of the fourth quarter, even the seven seem wounded and incapable of mounting in advance. Sure, we saw scattered signs of strength today, as we always do. This time it was aerospace and defense. There's always one sector that stays afloat each day, masking the broader weakness, urging you to come on in because the water looks fine. So what the heck is going on? A couple of things are at work here. And they really are what makes the markets very repulsive, even when it rallies. First, as we round the bend in November, analysts need to make the projections for 2024 for every company they follow. Given how skittish everyone's feeling about next year thanks to the Federal Reserve's relentless rate hikes, while long-term Treasury yields keep soaring, there's just no trust in the numbers. No one believes. They assume next year will be awful, a recession or a slowdown that will cause disappointment when we ultimately see the numbers. When you don't believe in management, you don't search for reasons to own anything. You bolt. Sell. That should be caught in a yard of crushed bones. Hey, let's talk about one. Let's talk about Caterpillar, okay? Because that was a big defeat for the Bulls today, big win for the Bears. CEO Jim Cramer has transformed Caterpillar from a deep cyclical company into one that has a much smoother growth path. And today he came out with a much better than expected quarter. You should see the stock was flying in the early, like 6-15, adding that the year will finish stronger than he thought. Rising profits, strong demand, so far so good, right? You'd think that'd be a recipe for higher stock prices. Well, you know what? If you thought that, you would be dead wrong. Sell. Yep, better earnings, better forecast, bright skies, and what happens? Stock goes down more than 6%. It was hideous.
A house of pain.
Why? Because no one trusts that a company like Caterpillar can possibly beat the estimates, no matter what assurances the company gives, given that both the U.S. economy and the rest of the world are slowing down. Doesn't matter that Jim Cramer, CEO, has navigated this company pretty much perfectly since he took over at the beginning of January 2017. Doesn't matter if the stock has doubled during that period, not including its bountiful dividend. Even as Cat's a dividend aristocrat, boosting its dividend every year for the past 29 years. Does it make any difference at all that the U.S. government's about to spend an insane amount of money on infrastructure, and infrastructure means Caterpillar? No, it does not mean jack. These positives aren't worth a warm bucket of spit in this market, because we evaluate companies every single day, every single hour, every single minute, based on the macro environment as controlled by the Fed and the long end of what we call the yield curve. Given that we hear from the Fed tomorrow, if Jay Powell talks tough, Caterpillar stock's going to go even lower. Probably will, along with the raft of other stocks that are regarded as cyclical. Who wants to step in before that event? Because we're going to reevaluate those companies tomorrow. How about me? Where do I come out? I'm not in the revaluation game. I actually like franchises. And if they get too high, maybe I do some trimming, and they get too low, I do some buying. We sold some CAT for the Travel Trust in the 270s, precisely because we expected the stock to get knocked down by ostensibly uninformed sellers who heard China orders are weak, even as China's now less than 5% of the business, or by people who don't trust Jim Cramer despite a stellar track record. Hey, it happens. As we told club members today, at 225, we're starting ready to buy back some of the stock. Of course, we're frozen, can't do what we want, but we tell people who are trust members what we would be doing. This kind of revaluation nonsense happens daily, every single day. I read an exclusive breaking news story today about how I should put quotes on that, about how NVIDIA will lose up to $5 billion in orders from China because our government's trade restrictions. Well, guess what? We have been saying that every single day. every single day to club members. And there it is, it's exclusive news. What the exclusive didn't say is that those chips are going to flow back to the U.S., and NVIDIA may get even more for them than they would from China, and it's going to dislodge some business from AMD and Intel. But maybe there's business enough for everybody. AMD signaled that tonight after it reported. Of course, that came after the stock went down 4 points, but then came back up 4 points because this stock was revalued within 30 seconds. Instant revaluation. First wrong, then right? I don't know. Which one is which? Not tenable, people. Again, like CAT or like so many other situations, NVIDIA is not going to get the benefit of the doubt. No more than that negative story should have been written like that if rigor mattered. Doesn't matter. NVIDIA has arguably the best track record of any company in the 21st century. They're not going to get the benefit of the doubt now because Wall Street won't give the benefit of the doubt to anyone in this environment. And by the way, I think you should own NVIDIA, not trade it. The same thing with Apple. But you know what? I have no illusions. Those stocks are probably going to get hit here. I mean, they probably will. Apple probably go down on its quarter, probably get clubbed beyond all recognition. I don't know. The news will be spun negatively. NVIDIA can't win without China. Apple's a total no-growth company with no prospects. Cutting numbers, cutting price target, cutting this, cutting that. Well, who's been right? Me or them? I rest my case. Oh, well, okay, not everything's been bad. ServiceNow was able to post a positive quarter, and its stock actually went up. Well, that's one. I got to find another. I got 499 others I got to check into them. Now, this market grinds down everything to a nub of a pencil. What's it ground down so far? How about healthcare? How about pharmaceuticals? How about banks? How about industrials? How about retailers? How about autos? How about utilities? How about semiconductor? How about fintech? How about real estate? You name it. One sector after another. Here's another anecdotal thorn in the side of the market. We know that Meta Platforms saw its stock fall 20 points when it said that advertising paused because of the war in Gaza. But last night, Pinterest said that the advertising pause has already ended. So I think buyers will eventually flock back to Meta and revalue it right back to where it was. My point, though, is that it shouldn't have gone down so much to begin with. But given how negative and jaundiced and lacking in trust this market's become, your stock might get punished by a best-in-show set of numbers. You need to know that this is all highly unusual behavior for a stock market. With the averages up so much for the year, you'd think that buyers would be less discerning, maybe the owners less skeptical. But tomorrow we find out whether the Treasury Department plans to fund the deficit short or long. Meaning, will it raise money out of a couple of years, or will it raise money at the 10 or 30-year levels? If it's the latter, then anything you bought today will be worth less tomorrow. That'll only be worse if the Fed says something in that press conference, that silly press conference where, like, people say, hey, you know, Mr. Fed Chair, you're awful. How can I be? Whatever. And then he has to call another person. He publicly humiliates himself. He deserves better than himself. When does all this stuff stop? When does this instant wholesale revaluation process regularly make you wonder if all stocks have any intrinsic value? They do. It stops when either long-term interest rates peak, either because the bond market somehow magically reaches equilibrium where actual real buyers come in, or the Federal Reserve says it's done tightening and stops selling its monster bond hoard. Positive days like yesterday and today make you feel like one of those bullish outcomes could be right around the corner, allowing us to have faith in the 2024 projections. But we get smashed tomorrow, and all the stocks that rallied today will have those gains repealed instantly. People, everything is just a trade. Here's the bottom line. Maybe we can only trust 2024 when we're in 2024. Or maybe we can only trust it when, heaven help us, Treasury bonds go down in yield and up in price for a couple days in a row. Would that be too much to ask? Maybe not. But I wouldn't bet on it. Let's go to Raj in California. Raj.
Yes, sir. This is Raj Bagai from California. I'm wondering regarding Lyft stock. Should I sell it?
Oh, you know, I saw this piece today. It was from MoffettNathanson. It's a very well-reasoned piece. It was well thought out. All this stuff is always well thought. It's really smart people. They went to really good school. They all went to Stanford, right? Stanford's a hard school to get into. And what we know about this, we know is that they hated Lyft and they think it's going to be crushed. I like Lyft. I think the guy, but I don't like the stock right here. But the guy who's running it is a smart fella. So I think the piece was too negative and biased. But I think the guy went to, like, Caltech or something. You know, I mean, maybe went to smart school. He's a smart guy. He's a Magna. The guy was Magna. Magna. Let's go to Jeff in California. Jeff.
Hey, Jim. Glad I got you on the phone. I've been listening to you so long. I remember the days when he used to throw chairs against the wall.
Yeah, I did that. I slipped the disc, frankly. No one knew that. I hit it really well.
You did a good job.
Yeah, I also had drop foot. I got a drop foot where you can't pick your foot up. You're not supposed to talk about your health issues.
Okay.
I shouldn't have said that. Go ahead.
Anyways, I got a question for you. What's going on with Hershey? I look at the stock.
You know, people look at that GLP. They're just looking at it and saying, well, you know what? First of all, it is Halloween, so happy Halloween. And Ben Stoto, he treated us today. He tricked us. But here's what's happening with Hershey. People feel like they're going to eat less chocolate because of the GLP-1s, these drugs. And I got to tell you, the people who eat chocolate are going to eat chocolate whether they're taking the GLP-1 or not. You know why? Because it tastes good. And I got into Stanford and I said no. True. All right. How will we know if this market is really true? How do we know if this market is a treat, not a trick? Maybe we can always trust this market when Treasury bonds finally go down in yield for a couple of days. Well, we have to wait and see. Is that too much to ask? On Made Money tonight. Farming equipment company AGCO reported a strong quarter this morning, which sent the stock higher, but for some cautious commentary regarding lower commodity prices, a younger fleet. I don't know. Is it still right to stick with the ag story? Let's talk to the top brass. Then, we only have one way of celebrating Halloween on Mad Money, consulting the fear gauge. I'm surveying the VIX and seeing what it could be signaling when we go off the charts. And Pfizer had some write-offs related to COVID treatment, vaccine leading. I hope you got your vaccine for the pharmaceutical giant. Are investors getting a buying opportunity with a 5% yield? I think we have to talk to the CEO. So stay with those really great schools and Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.